从去年底以来，欧洲五国是纷纷宣布不需要纾困，让外界相当期待，是否欧债风暴是已经解除，欧洲的经济是步入正轨。不过仔细检视欧洲的状况，希腊还是有高达15亿欧元的债务有待解决，而目前是没有共识。专家分析到，认为欧洲的情况确实是比以前好上许多，而欧洲央行可能不会再度降息来刺激经济，甚至欧洲的 GDP 成长率可望达到2%。而到底真实的情况如何呢？来看我们今天的关键对话。
在世界地图上，欧洲就是右上角的那一个小的区块。不过，这一个小的经济体却影响了全球经济的变化。而到底今年的欧洲市场会怎么样的变化？欧债危机的风暴是不是真的已经解除了呢？今天我们非常荣幸邀请到了摩根资产管理公司的董事总经理 John Becker 来接受我们的专访。Hello, nice to meet you, John.
Nice to meet you.
We see that last year some biggest countries exit from the bailout successfully. So do you think that it means the end of the Europe debt crisis?
I think a lot of progress is also being made in Portugal. Italy is also making good progress. In fact, the Italian situation in terms of pure deficit is positive. But after interest payments, yes, it is slightly in deficit, but it is making a lot of progress as well. Greece also has made progress. Now, the situation in Greece is still very risky. GDP growth is still negative. There's huge unemployment, but nevertheless, they are making progress. So, whilst I think we have some further way to go before we can confidently, definitely say the crisis is over, I think we are certainly past the worst and we're on the road to recovery.
But the IMF forecasts that the fiscal gap in Greece will reach 1.5 billion euro this year, and there is no consensus of the solution. Do you think that it will block off the recovery of the euro market?
I don't. I don't think the Greek economy is sufficiently large to impact the rest of Europe. So growth in Greece does not influence the level of growth across the rest of Europe. Also, the difficulties that Greece is experiencing are very, very well known. So I don't think we're going to get any negative surprises from Greece. The problem is really, really difficult to solve, but it's important that people already know that the problem exists. So I don't think it's going to affect European growth, and I don't think it's going to affect European stock markets.
And from your observation, do you expect that the ECB will cut the interest rate this year?
I think it's possible. What the ECB is looking at is the level of inflation in Europe. Its target is around about 2%, and that's pretty common amongst most central banks. That's the comfortable level of inflation to have. At the moment in Europe, it's, I believe the most recent data point was 0.7%. That is obviously below the ECB target. There are some concerns that Europe might enter a deflationary period. The ECB will do everything in its power to avoid that, so we're actually quite comfortable that that's not really a risk. But nevertheless, it may encourage the European Central Bank to take rates down some more. They might go to 0%. It's a possibility. Is it a prediction? Perhaps not.
And how about the domestic demand? We know that the domestic demand in the euro market is still low, and the youth employment rate is still high. Do you think that for the investor, the euro market is safe enough for investing?
I do, yes. So if we look at youth unemployment first, undeniably it is a big problem. I think in Spain it's over 30%. The same will be true for Greece, if not to an even greater extent. But I think as GDP growth returns, I think we're going to see a reduction in that level of unemployment. Looking at consumer demand, the most recent data that we have for that is that it is actually improving. It's gone back into territory where it is now expanding, and that's true right across Europe. So therefore, I think that is positive for economic growth. I think the stock market represents a good opportunity. I don't see any big risks So therefore, I think it is safe for investors to consider an investment at the moment.
The IMF forecasts that the real GDP growth rate will reach 1% in the euro market this year. Do you agree with this? How's your prediction?
My prediction is that certainly economic growth will be positive this year. I personally think that 1% might be conservative. I think it might be more than 1%. We're seeing very strong economic data coming out of Germany, France also to an extent. As we discussed, the peripheral countries are all recovering. So therefore, the lead indicators that we look at, the economic measures that we look at that predict the growth rate, they are all coming out positively. On Monday, I believe, Spain issued its PMI data, again, lead indicator, and that was way above expectations. It was a very, very strong figure. So again, it indicates that growth should accelerate into 2014. So I think that the IMF are being very conservative. I think we could have a positive surprise.
So do you think that maybe it will become the high single-digit growth rate this year?
Maybe high single digit might be ambitious, but I think low single digit is probably fairer, maybe 2%. Perhaps a little bit more, but no, I think high single digit is unlikely.
Mm-hmm. Okay, and we see that the development among the Europe country is very dynamic. So on your perspective, what country and what kind of sector that will be better in the Euro market?
Because of the recovery in economic growth that we're experiencing, we want to find those companies that will participate in that growth to the greatest extent. And by that I mean which companies are most economically sensitive. So when I look at that, when we look at stocks specifically, we don't make a judgment about a particular country or a particular sector. We're just looking for stocks that are attractive, and then the portfolio builds up and we get our exposures. But when I look at the portfolio currently, we're very underweight Switzerland. So why is that? It's because in Switzerland, the vast majority of the stock market is pharmaceutical companies and food companies. They're fine companies, they're nice, grow their earnings very stably, but they're not economically sensitive. You don't consume more drugs in the Western world just because you've got a new job. It doesn't work like that. Their earnings don't increase with economic growth. So therefore, we prefer those stocks that will participate. Some of the ones that I can think of where we are overweight, in the UK, for instance, we have a big overweight position in house building stocks. And that's because, especially through 2013 and now coming into 2014, we're seeing a big recovery in the number of housing transactions in the UK. During the recession, people were scared to buy houses, banks were unwilling to lend, so therefore people just couldn't. 2013, when you compare that to the peak year for housing transactions, they're at 50% of the peak year. But population growth is continuing. People are still getting married. Children are still moving out of their homes and moving into flats for the first time. So the demand environment shouldn't have changed, but now the government is supporting people to buy their first house. It's giving them monetary incentives. It's also helping the banks to lend. So we're seeing a big improvement. We've seen a lot of house builders beating their earnings expectation. That's very attractive for us.
When we focus on the Euro stock market, we see that last year, the Euro stock 600 has rose out 20%. So what's your prediction for this year?
Yes, we were very pleased to see the rally in stock in the European stock market last year. 20% is a very strong performance. Now, obviously, the market can't do that every year. But you know, when I look at the market, what I like to consider is what's the valuation? Is the news flow going to get any better? You know, how does it look relative to other markets? And my view is that valuations are still cheap in Europe. They're especially cheap relative to the United States. So there's potential there. Earnings growth in Europe as well has the potential to accelerate. That's because of the economic recovery that we were just considering. And the general risk environment is also improving. Investors haven't liked Europe because of the issues that we were just discussing about the peripheral countries, but they're now improving. So therefore, again, investors are probably more willing to look at Europe. So for all of those reasons, I think the market will go up, but it's difficult to say whether it's going to go up more than 20%.
Thank you, John. 欧债危机随着欧洲5国纷纷宣布不需要再纾困，警报逐渐解除。不过，欧洲市场能否迈入稳定的复苏，欧元区结构性的问题仍是关键，也影响着今年全球经济未来的表现。